What's up, guys? Bill here. Welcome back to another QQQ review. Lots to talk about this week, so let's jump right in. First of all, I'm going to do a little bit more like level drawing and like FEG drawing and stuff while I go over these charts so you can kind of see how I do it. The other levels on the charts are something I would come into the day with, like previous day's high and close, these purple lines, especially today because Q's was an inside day. Other things like my GEX, the red and green are GEX levels, positive and negative. And if you see dark blue dashes, those are dark pools. But I'm going to draw some of the other things in real time so you can kind of see how I find these levels and target these levels, okay? So first thing I want to talk about coming into the day is on the hourly chart here, we had some data in pre-market, and that data was retail sales, and that data came in extremely hot, meaning that consumers are continuing to spend more money than is anticipated. And what does that mean? That the economy is not really showing any signs of slowing down. What does that mean? That the Fed might have to keep holding rates as high as they are, maybe even raising them to fight inflation. So the market doesn't like that. The market wants rate cuts or a reduction as soon as possible. So we see here this data comes out and we immediately flush quite a bit, down $3 to $4 all the way down here before we open. Okay, so one of the first things I'm going to do when I see this happen is I'm going to notice this fair value gap, this imbalance candle. And I'm going to put a line here on the previous candle's low to know where that gap's going to fill, because I might not know exactly where the top of the gap is. It ends up being here. And intraday, I don't love having huge red boxes on my chart. It just gets annoying to look at on the smaller time frames. So sometimes I just put a line where the gap fills. Okay, now this can be useful later for targeting long side positions or looking to re-short. It just depends on how price action's responding when we get there. Okay, so that's the first thing I'm going to do. And coming into the day, I kind of wanted to go long on Qs around 365. And when we got this flush, I was pretty excited. But unfortunately, my theory of this sell-off getting bought back up was correct, but my execution wasn't great. So early on in the day, I got a not ideal entry. As we can see, we wicked well below 365 all the way down to our Friday's low, and we swept the lows. And that was something I just didn't think would happen. And in retrospect, I should have gave it more credence, and that would have been a great place to get in. But let's go down to the smaller time frames and look at some stuff here. So Qs, we open and we're immediately testing this 365 area where we also have this 365.20, which is a, I believe it was about $1.2 billion bullish signature print. And this gave me the conviction to try to go long here. So on this little dip right below it by like a cent or two, I hopped in. And I was able to make a little money. I sold about a third of my position for like 20%, but then eventually I got stopped out, right? And in the meantime here's our 15-minute opening range that sets up. So the first 3 5-minute candles, high to low, all right? And by the time we start losing this opening range low, I'm stopped out, probably around here for, on the remaining 2/3 of my position, like I think it was a 30 or 40% loss. I can't exactly remember. Might have been 40. So I'm red on the day here. All right. And now I have decisions to make about, do I want to try to re-short somewhere? Or is there another place to go long? I initially start thinking about maybe re-shorting. And this is another mistake I made to start the day. Now, Q's did, my idea here was an opening range low retest. If we push back up after this confirmation candle, here's your 10-minute close. This is telling me, okay, we've broken the opening range low. Let's see if we can get a retest to go short. We obviously don't get that. Instead, we sweep these lows from Friday, okay? But I haven't really put that together yet. I haven't really said, you know what they're doing? They're sweeping the lows, and that's probably going to give them enough liquidity, plus potentially trap people that shorted the opening range low and lead to a rip. I haven't got there yet. This was my oversight and mistake that started me red on the day. So what did I do instead? I didn't try to go back short at opening range low. I preferred instead to even give myself a little bit more time. And I played a 618 rejection, okay, on our intraday fib. It was pretty early on in the day, and there wasn't a ton of range in the day yet, which maybe I should have avoided the fib in this situation, but there was quite a bit of confluence with the 365 gex, this dark pool, your 618, your opening range low. So I entered right here on the touch. And as you can see, I was immediately stopped out. Within a few minutes, I ate this huge stick up. I had my 25% stop set and I got stopped out. Okay. So now I've taken 2 losing trades to start the day. I'm down about 6%. And this is where I start to turn my day around. And this is a good lesson for you guys, is it's okay to be wrong. Okay. It's not okay to stay wrong. And it's not okay to be wrong huge, right? So I had good, realistic targets for my trades and realistic stop losses and tight stop losses, and they stopped out, and that was it. I didn't average down. I didn't keep fighting, every move and trying to hop right back in. Okay, so I take these losses. Do I like it? No, but there's a lot of day left, okay? And what happens on this huge stick that stops me out? We close over opening range high, okay? So now we have lost opening range low, but regained it, therefore trapping people. And this candle, I also now is when I look back, because I'm so kind of caught off guard by how quick and aggressive this pump was, that I feel like I must have missed something, okay? I immediately say, okay, what did I miss? I think I even said it out loud on Voice of the Room. I was like, what did I miss? How did I miss this much buying coming, right? And that's when I noticed the sweep of the lows from Monday. I just really didn't think, or Friday, sorry. I just didn't really think we'd get down there. I was so fixated on my levels, 365 psych. See, I have the alert set there and this dark pool and everything, and then our opening range set up there. It just felt like, okay, this is the spot. And I just overlooked this, and it's going to happen. You're not going to catch every move. You're not going to be instantly right, nailing every bottom and every top, and that's fine. It's how do you adapt? How do you accept your defeat in a gracious way, not blowing up your account, and then even better, sometimes being able to flip, make all that money back, and then some. And that's what I did. All right. So after the stick, we're now playing an opening range breakout to the top. You could buy right here. I was still being a little cautious because I've already taken 2 trades today. But what did I talk about at the beginning of the video? Q is an inside day coming into today. That's this purple line. Once we regain the inside day low, as somebody who plays a lot of inside day setups, that gave me a ton of confidence that this rally could sustain, and we could fill this FVG from pre-market on the hourly and fill the whole gap down from the move up here. All this to previous day's closing price, the purple dashed line. So on confirmation, retest, I hop in the reclaim of the inside day low. And at that point, my first initial target is let's fill this hourly FVG. That happens at this red line. That's 100% win right there on Qs, okay? On zeros. Now, like I mentioned, my first loss of the day was like 30 to 40% after scaling some, so not a big loss. And then my second was a full-size position for a 25% hard stop loss on this candle. My position's already 100% here. I'm already making back these losses just from this. And now I have runners at a break-even stop. Remember, I entered down here. So I'm out a lot of my position here, probably 90% of my position. But I have a break-even stop. And what's my next target? Let's fill the whole gap from today, or at least get to the biggest GEX magnet on Qs, which is 369. Okay? We get to 369. I'm not stopping out here. Break even. I entered down here. All we're getting here, guys, is a flag on low volume, right? Low volume pullback. You see the red candles lower than the green every time, right? Then we break out on volume, all right? If you don't want to just play a break-even stop, you just watch price action and you tell yourself, okay, we're flagging here. Little flag. and it's on decreasing volume, like total decreasing volume the whole way. But even better, the little red pull downs are on lesser volume than the green push back up. And then you get the volume increase on the move out. Okay. So we end up hitting 369. Here's a scale like half more of my runners. They're up around 250 to 300% here. Then eventually we just keep grinding up. Use your EMAs, grinding up, and we hit the previous day's closing price, which fills the daily gap that would have been created by this huge move down in pre. That's almost 400%. So, and I'm only holding a tiny bit, guys, but my full size position, roughly 10% of my account. If I'm holding 10% of that, every 100% is 1% on my account. So with that tiny size, I can make back 4% on the trade. And that's what that's more than I lost, on this first attempt to short the 618 when I took a 25% loss, which is around 2.5% of my account for position size, right? So this is the importance. Again, we talk about risk management. Obviously that's your sizing and where you stop out, but it's also being able to hold those winners. So, coming back from taking a couple losses, a lot of people get nervous. They either stop for the day, which is fine, or they do something stupid like oversize, thinking that's the only way you can make it back. Well, if I lost playing 10% of my account twice, I better play 20% of my account on this next trade to make it back, right? No, that's where you get yourself in trouble, because one of two things. If it goes against you, now you're losing twice as much that you were going to lose. Secondly, most people can't handle sizing up like that and really manage the trade effectively. They're going to start to get nervous and anxious. That's human nature. So you got to keep your sizing consistent. And when you get these winners, you got to have your plan and let it follow through if it's going to. We can't control what the market does, but we can just control how we react to it. So we hit my first target. I'm not all out. I'm out a lot though, right? I'm already hitting 100%. No need to be super greedy, but this trade might not be over. It's not giving me a reason to think it's over. I set a break even stop. That's a lot of cushion. That's 100% cushion. But that's, if you're going to play zero DTEs, sometimes you need a cushion like that. These probably pulled back to maybe I was up 30, If you had even tried to lock in a 50% win, you're stopped out, and later you look back and you're like, damn, I sold for 50 on those runners and they went 400. You're going to kill yourself for that. You're going to beat yourself up, right? So set the break even stop and watch the chart. The chart gives me no reason to get out. This is a low volume flag. Okay. Bull flag, breakout, mini bull flag, breakout 2. Now we're almost to another target. Okay. And then we're just grinding up, holding those EMAs as we hit a couple other targets. Previous day's close, fill the gap. 370 psych, more Gex magnet. All right. This is how you stay in these trades, for a long time, right? You can use your EMAs. Look at how it respects it. And this is just the 5 minute, rides it all the way up. All right. Let's see. So that's the majority of what I wanted to talk about with the FVGs and stuff like that. There were some other trade. There was one other trade, and this was actually on SPY. I want to talk about. All right. So as you can see here, I've already got this drawn, but this is a 30-minute FVG, bullish FVG from this big move up, right? So here's the previous high, candle's previous high, other candle's low. Actually, you know what? It was a 15, but the 30 is basically the same, just a few cents different on the following candle. All right. So we had already got up here for the day. I was playing Qs, not SPY on calls. So I was pretty much done. Went from down 6 or 7% on my account to up, 4 or 5% by the time my runners, were all sold. And I was really just cool with being done for the day. I wasn't going to try to nail a top and play back down, although that would have been awesome. And it was a great move. And SPY ended up rejecting again from the place it's been rejecting for like 6 days now, up here at this gap fill, this bear gap at 438-ish, right? 438.43 is exactly where it fills. It still needs a couple cents. Today it topped out at 438.14. It just keeps rejecting up there. But I was happy with what I had already done, and I already went from red to green, so I wasn't going to force things too much. But I did tell myself, if we pulled all the way back to this FVG into the intraday golden zone, the glory hole setup that I created, that I'd be interested in calls. All right, so we actually did get this. Now, it wasn't perfect in the way I wanted to get in, and I'll explain what I mean here. Ideally here, this is a pretty, big range day, right? We got about $6 a range. And because of that, the distance between the 618 and the 786 is over $1. I like to give myself about 50 to 60 cents of risk when I play my intraday 618s. So that means that in this situation, I need to get in somewhere around the middle. So I had kind of looked at the 786 and I said, well, if I add 50 cents to that, that's 434.17. So I marked it on a chart and I was waiting for price to come down. You can see it basically came and touched it. Okay. So, it wasn't perfect, right, guys? But what happened was, if you zoom in, and I don't know why the volume looks so small here, but I'll zoom in. You can see that we just got this big sell, big stick, and it was on increased volume from several candles before it. But then we get even more volume on this green bullish doji compression candle, right? It goes back to what this is, a bullish anomaly. Volume price analysis. This goes back to the effort versus the result, right? So your effort is your volume. Your result is your price, your candles. So nice effort increase, nice result increase, but you're going to want to see more continuation with higher volume selling if you're going to keep going down. If you're bullish or bearish right here, you definitely don't want to see way more volume coming in and the candle closing green compressed, all right? So to me, this was a buy signal. It dipped into my FVG. It was 6 cents away from where I was thinking about starting my long position. And then I got this, basically, this is an alert to me. Like, it might as well be a call out from the market saying, get in long, right? So because of this volume. So I say, okay, whatever. I'll take my entry here. It's not ideal because I probably would end up stopping out before we test the 786 if it did go against me. If it, instead of having to get in, in the middle of the FVG, I had to get in up here on this close. But it worked out for a small win. We got a little bit more consolidation. Maybe it's a bear flag. I'm sure a lot of people thought bear flag here, but I was pretty convinced because of this volume that we'd get at least some type of pop. And we did. And what did we get? What else happened on that big red candle down? Well, that's another FVG, but this is just a 5-minute FVG, guys. So here's your FVG, bearish FVG, right? That's another thing. When I see this volume come in, I think, oh, we're going to fill this FVG at least, right? That's my theory. And we do. Okay. 1 candle later, 2 candles later. And I'm out most of my positions trying to save some runners because I want to see if we can fill another FVG from the 30-minute. All right. This candle right here. See how it's on nice uptick in volume from the previous 3 candles. This is where it fills. So I had marked that. I didn't want to have a huge red box on the chart. But we go back to the smaller time frame. And look where we end up closing, guys. We close just under it. We wick up and then wick right and fill it in after hours immediately once the bell hits, and we're right into after hours. There's one last dying little pump here that comes up with this wick, fills that bearish FVG, and you end up with a nice, let's see, 34.39, a $2 move off the glory hole setup, which is a FVG or imbalance in the golden zone of an intraday Fibonacci retracement. This is a setup I'm going to keep talking about the rest of the year, and then I'm going to have a video just dedicated to them. I'm still collecting more data. I just want to make sure the win rate is great and see how often it plays out and how many setups you can actually get per week and things like this, so I can put together a nice detailed video about it. But that's my day trading QQQ and SPY, mostly QQQ. Hopefully that helps, guys. If you have any questions, just leave a comment or find me on Twitter and DM me, and I'll help you out.